It is 11 o'clock, so we are going to get things going. My name is Robert Gibbons. I'm the Director of Education at California Association for Nonprofits, also known as Cal Nonprofits. And today we're here at our Good Standing Compliance and Your Nonprofit webinar. This has been a very well-attended webinar, co-sponsored by the Inland Empire Community Collaborative, as well as NEO Law Group. So we're very thankful for both of their support in this endeavor. We can move on to our housekeeping slide as things are getting going. There's a chat box that everyone is using very well to drop their name and where they're dialing in from today. And the Q&A box will be where you'll ask questions. We're going to try and leave a little bit of time at the end of the webinar for Aaron to answer some questions. So you can go ahead and drop them in the Q&A. And if we're able, we'll answer them during the webinar. So now I can take us over to our next slide. So there are lots of member benefits and lots of perks to joining Cal Nonprofit as a paid member. But my favorite membership perk among all of these is that you get to attend webinars like this for free. Many of our webinars are paid webinars. So being a member enables you to join and access all of our resources. And there are so many of them. Really invite you to join us and peruse our member benefits online. Great. And now I would like to begin our webinar by introducing Aaron Bradrick. Aaron is a longtime partner of Cal Nonprofits and has really been a wonderful partner, joining us many times actually to talk about compliance. She's a nationally recognized expert on nonprofit law. She's a committee that works with the California Attorney General's office on the recently revised guides for charities. And Aaron's practice focuses on corporate governance, charitable trust, tax matters solely for nonprofit and exempt organizations. She also co-designs and teaches a nonprofit business course at Columbia University. So we're really pleased to have Aaron join us, and I'd like to welcome her to join and begin her presentation.
Thanks so much, Robert. It's saying that the host has stopped my video. If you want to enable, there you go.
There you are. Great.
Technology. Thank you so much, Robert, for the introduction. Thanks to Cal Nonprofits for having me back. And thanks to all of you for joining us today for a discussion of compliance. What could be more exciting? Vanessa, if you wouldn't mind jumping to the next slide, that would be great. So I'm just going to go ahead and jump right in. As Robert mentioned, if you have questions as I'm going, feel free to drop those in the chat. And then we'll also try to save some time at the end to address some questions if there's time. My contact information is also at the end of the slides in case there's something that we're not able to get to today. So I'll just start by noting that the term compliance includes a lot of things, right? That's a big subject. Compliance can mean a lot of different things, and it can look different for every single nonprofit. But what we're going to talk about today is a pretty narrow subset of what is encompassed by the concept of compliance. So we're going to be focusing today really on the core filings that are due by nonprofit organizations to the Federal Internal Revenue Service, to the California Franchise Tax Board, the California Attorney General's Office, and the California Secretary of State's Office. Now, these filing requirements generally apply to California nonprofit public benefit corporations that are recognized as exempt at the federal level under Section 501c3, right? So some of these filings I'm going to discuss today could apply to other types of nonprofits, other types of exempt organizations, organizations that are formed in another state but are doing business in California. But just given the timing that we have, and for purposes of our conversation today, I'm going to be mostly referring to an organization that I'm assuming is a California nonprofit public benefit corporation that is a 501c3 tax exempt organization. And the only other thing I want to note is that these filings we're going to discuss today and these agencies are certainly not an exhaustive list of every organization or every filing a nonprofit may need to submit. So I just would encourage you to take a look at your organization's activities, operations, perhaps speak with a professional advisor about whether You may be subject to any other registration or reporting requirements based on operations and activities of your organization. Okay, if you wouldn't mind going to the next slide. So we are going to start with the IRS. So the Internal Revenue Service is the federal tax agency here in the US, right? And an organization that is recognized as tax exempt under Section 501c3. You can go to the next slide. Will generally have to file an annual information return with the IRS every year. We call it an information return because 501c3s are exempt from income tax, right? That's why you get that 501c3 tax exempt status. So it's not necessarily a tax return, but you are essentially required to submit, in some cases, a pretty lengthy form that goes to the IRS every year. It provides a lot of information about the organization's activities, its leadership, its transactions, its financials, its public charity status, and a whole bunch of other things. It's a pretty impressive application or filing that goes in. Now, there are some exceptions to organizations that are required to file this annual return, including churches and certain affiliated organizations and a few others. But for the most part, most 501c3s will need to submit a Form 990 series to the IRS annually. Now, there's different form options within this Form 990 series. The Form 990 itself is the form that's kind of the standard filing that's available for most exempt organizations to file to the IRS. It's a longer form that it asks for a bunch of information. But for some smaller 501c3s, there's also an option of filing a more streamlined return. So the first form I'll talk about is the 990 EZ. So this is available for an organization that had gross receipts during the reporting year of less than $200,000. When I say gross receipts, I mean the total amounts that the organization receives from all sources during that tax year without subtracting any costs or expenses, right? So it's gross, not net. So in addition to an organization having less than $200,000 in gross receipts during the reporting year, they also needed total assets at the end of the reporting year of less than $500,000. And if an organization meets both of those criteria, they have the option of using the 990 EZ, which is a bit more streamlined than the full Form 990. It requests a little bit less information. It's important to note that there are some exceptions to organizations that are eligible to use this 990 EZ, even if they meet those criteria. So one key example I'll just mention is that if you sponsor donor-advised funds, a hot topic in the nonprofit space currently because of the recently proposed regulations from the IRS. But if you sponsor donor-advised funds called DAFs, then you have to file that full long Form 990, even if you meet the financial thresholds for the 990 EZ. Now, for even smaller organizations, we have an even simpler return that can be filed to the IRS called the 990N. It is sometimes referred to as a postcard, even though it is now currently an electronic document that's submitted, but it used to be a postcard. And it really is very, very simple. You're not providing any financial reporting to the IRS. It's kind of a check-in document that's submitted to let the IRS know you're still around and you're still operating. But this really streamlined 990N postcard document is only available for organizations that normally have gross receipts of $50,000 or less. And what we mean by normally in this context is if you look at the last 3 years of the organization's financials, they need to have had an average of $50,000 or less over those 3 years in terms of gross receipts. And then finally, the final 990 series return that I'm going to talk about is for private foundations. So when an organization obtains tax exempt status with the IRS under Section 501c3, by default, we assume it's a private foundation. It's classified as a private foundation, unless it can satisfy one of the grounds for qualifying as a public charity. And public charity status is generally, in most cases, considered to be a more favorable tax exempt status for an organization to have or classification to have. It causes the organization to be subjected to less kind of reporting requirements and oversight requirements and rules. So if an organization cannot satisfy one of the public charity status tests and is classified as a private foundation, then it has to submit the 990 PF, regardless of its receipts, regardless of any other factors. So all private foundations have to use that particular form because it asks certain questions that are specific to the rules applicable to private foundations. Now, in terms of finding these forms, they're pretty easy if you just search for them online, but there's also a link to a website that's here at the bottom of this slide that specifically includes filing forms specific to exempt organizations. So you can go there, you can search by form number or name, and it should give you a list of organizations. Now, as I mentioned, even in the agenda, the introduction, there may also be a number of other forms that your organization needs to submit to the IRS along with your filing, including a bunch of schedules to the Form 990 that may be required, depending on the circumstances for your organization. You may need to submit the 990T form if you have unrelated business income or you owe the unrelated business income tax. There's a form that you use to report excise taxes. There's a form for racial non-discrimination policies for private schools if they are on the smaller side. And then there may be other forms that are related to your employees or taxes other than income tax. So again, just make sure that you're keeping in mind that the 990 may not, or the 990 series may not be the end of your filings that are due to the IRS. If we could go to the next slide, please. So when is the Form 990 series due to the IRS? So to generally do 4 months and 15 days after the end of your fiscal year, right? So the 15th day of the 5th month after the close of your fiscal year. That means that if you are an organization on a calendar year, your return is going to be due May 15th. If you're an organization on a June 30 year end, your filing is going to be due November 15th. And I'm not going to do the math for organizations that are on other fiscal years, but you get the idea, right? So it's 4 months and 15 days after the end of the year. And what happens if you don't file by the deadline for your 990 series to the IRS? It is possible to get an automatic extension of 6 months if you think you're not going to be able to submit on time. That is done by filing Form 8868 to the IRS. It's a simple request for an extension. The key thing to note here is that you've got to file that request for an extension before the due date, right? Not after the due date has passed. Now, if you miss the due date or if you don't request an extension, or you request an extension and you miss the extended due date, the IRS can impose penalties for late filing. Those penalties depend on the size of the organization. So for organizations with receipts of under $1 million in the year, then the penalties can be $20 a day up to a maximum of $10,000 or 5% of the gross annual receipts, whichever is lower. Now, for some larger organizations that had more than $1 million in receipts during the reporting year, the penalties go up a bit to $100 a day and a max of $50,000. So these are some of the more significant financial penalties that we see in terms of the filings we're going to discuss today, and they can add up if you miss your filing. But in addition to the penalties, there is also a process that provides for the automatic revocation of the tax-exempt status of an exempt organization if it misses 3 consecutive years of 990 return filings with the IRS. And this automatic revocation process applies regardless of which Form 990 you are required to file. The process was put in place to try to clear up the records at the IRS with the assumption that if an organization hasn't filed a 990 for 3 years in a row, maybe it's not even operating anymore, right? So the IRS has no discretion around this revocation. It will just automatically revoke the tax-exempt status of the organization, effective as of the date that 3rd consecutive missed filing was due to the IRS. So really important to make sure your organization is getting these 990s filed into the IRS. Even if you're eligible to file that 990N, make sure you're getting it submitted and submitted on time to the IRS. If an organization is auto-revoked, it can apply to have its tax-exempt status reinstated. In many situations, it will require submitting a full exemption application to the IRS to be reassessed. There are some exceptions to that process. And the other thing to note, though, is that it will always be, at least currently, in your record in the IRS database that you were automatically revoked and then reinstated. And that can create some confusion with donors and with funders. So I would highly recommend having a process in place to make sure you are paying attention to and meeting all of the filing obligations we're discussing today. Okay, if you wouldn't mind going to the next slide. The next organization or agency we're going to talk about is the Franchise Tax Board. So the IRS deals with federal tax exemption and income tax at the federal level. But at the state level, a nonprofit may also be able to obtain exemption from state franchise taxes. The organization that is exempt from state franchise taxes with the Franchise Tax Board is also going to have to file an annual return to the FTB each year. Now, it's a little simpler with the FTB. There's only 2 forms rather than the 4 we just discussed for the IRS. It's the Form 199, which is kind of the standard information return that is used. And I'll just note that this form is required for all private foundations, regardless of their gross receipts for the year. And then there is one streamlined form option, which is the Form 199N. And so there's no Form 199 easy like we have at the federal level. There's just a 199N that is available for really small organizations that meet that same threshold for the 990N, which is less than or equal to $50,000 in gross receipts averaged over the 3 past years. And again, like we said with the IRS, there may be additional information forms that you need to submit to the FTB in addition to just your Form 199. So for example, there's a Form 3509 that's used to report political or lobbying activities, and a Form 109 that's used to report unrelated business income and unrelated business income tax that may be owed. Next slide. So the good news is that this Form 199 return to the Franchise Tax Board is due on the same schedule as the Form 990 series to the IRS, right? So 4 months and 15 days after the end of your accounting period. The other good news is that the FTB provides an automatic additional 6-month extension without you needing to file a request for an extension, right? So unlike the form you can submit to the IRS to request the additional extension, you don't need to submit anything to get that 6-month extension from the FTB. The caveat, though, is that in order to take advantage of this extension, the organization needs to be in good standing with the Franchise Tax Board. And the other caveat is that if you owe any amount of tax for the filing year, then there is a separate process where you do have to request the extension, may be required to make certain payments in advance of getting the extension, right? So if either of those apply to you, then you want to be making sure you're either checking with your CPA or following up on the process for getting an extension if you need more time to get your 199 in. Now, if you don't file in time, there are potential penalties that the FTB will impose. These are slightly less scary than the ones imposed by the IRS. The FTB penalties are $5 a month to a maximum of $40. So we're not talking huge financial amounts here, probably unlikely to be much of a deterrent on their own. But I will mention in a few minutes why it is super important to pay penalties if you are subject to them by either the FTB or the Franchise Tax Board. And the other thing to keep in mind is just like the auto revocation process we were talking about with the IRS, the FTB also has its own auto revocation process. So just like at the federal level, if you fail to file a return for 3 consecutive years with the Franchise Tax Board, you will automatically have your exemption from franchise taxes revoked by the FTB, and you may need to file for reinstatement, or you may be subject to franchise taxes at the state level. If you wouldn't mind going to the next slide. Oh, sorry. So before we move on, I'm just going to make one more note about the Franchise Tax Board. And I'll, at the end, I'm hoping to do a little bit of a run through of how you can do kind of a checkup of an organization with each of these agencies we're talking about. So I'll demonstrate this when we do that. But for a tax exempt organization in California, there's actually 2 different statuses that you need to be aware of with respect to the Franchise Tax Board. There's your entity status and there's your exempt status. The exempt status has to do with the organization's exemption from franchise taxes at the state level, right? You may have filed a 3500 or 3500A to get that exemption. Or if you never filed it, you may not be exempt from franchise taxes, right? But then separately, there's entity status. And entity status is about whether or not an organization is in good standing with the Franchise Tax Board. So this generally has to do with whether you have been submitting your returns on time to stay in good status and whether you've paid any amounts that are due to the Franchise Tax Board. Now, if you're not in good standing with the FTB, then the organization can go into suspended status. And this has real implications, right? So if you fail to file a return when it was due, you could be suspended, or if you fail to pay an amount that is owed to the FTB. So if you're imposed, if you have a penalty imposed for a late filing by the FTB or by the Secretary of State's office, because those amounts get paid to the FTB, your organization can have its status with the FTB suspended. Now, the implications of suspension are actually significant, right? If an organization is suspended, it technically isn't legally permitted to engage in activities or do business at all, right? It also can't sue. It can't defend itself in court without special permission. And it loses the right to protect its name, meaning that another organization could technically form with the exact same name while you are in suspended status. The FTB will also revoke your tax exempt status when it puts the organization into suspended status. It's really important to make sure you're staying current in your filings with all of the agencies we're talking about, including the FTB. And then the final thing is that if the organization is suspended for 48 consecutive months, so 4 years, then it may be administratively dissolved by the Franchise Tax Board, right? So the assumption is that maybe this organization is actually no longer operating and we're going to wind it up and dissolve it. And if that is done in error, it can be a massive headache or maybe impossible to correct. So really important to make sure we're getting these filings in. Okay, so now we're going to turn to the Attorney General's Registry of Charitable Trusts. And I have to apologize, it's been the Registry of Charitable Trusts my entire career, but just changed on January 1st of this year to the Registry of Charities and Fundraisers. So I will probably misspeak and say the wrong title, and I have it here, but the new name is technically the Registry of Charities and Fundraisers. The Attorney General's office is responsible for overseeing the solicitation and the use of charitable assets in California. So that means the AG's office is really concerned with nonprofit governance, with the proper use of charitable funds in the state, and with protecting donors in the state. If you wouldn't mind going to the next slide. Excuse me, just one.
Hi, Erin. Looks like you. Oh,
Yeah,
okay.
sorry about that.
Perfect.
Somebody was vacuuming in the hallway, so I just asked them to pause. So I apologize for that background noise. The timing, it never ceases to amaze me how often something like that happens. So with the Attorney General's registry, there is an initial registration that is due. It's by all California nonprofit public benefit corporations, and then any other organization that is holding charitable assets in the state of California. The initial registration is called the Form CT1, and it has to be filed with the AG registry within 30 days of when the organization first receives charitable assets. There are a few exceptions, right? Religious organizations, hospitals, educational institutions, a few others that aren't subject to this registration requirement. Now, when you submit that first registration, which I'm hoping most of the organizations on this call already have done long ago, but for any newly formed nonprofits, I'll just briefly mention this, you have to attach a copy of your bylaws and your articles of incorporation with that initial Form CT1 registration. You also have to attach a copy of your exemption application and your determination letter with the IRS, right, if you have them available. Now, if you're submitting that Form CT1 before you've applied for exemption with the IRS, before you've received your determination letter, then you can send it in nonetheless. You don't have to wait, but you will get a letter back asking you to send them in when you have them to complete the filing and the registration with the registry. One important thing to note is that those forms, when they're submitted, will be uploaded as PDFs in the AG registry and are publicly available. So we'll see that when we do our kind of walkthrough of these websites later. But one kind of trick or tool that it can be helpful is that if you're ever trying to find copies of the exemption application or the initial formation documents for an organization, the AG's website is one place that you can look to see if they have uploaded PDFs of those documents and if they're available for you to review. If you wouldn't mind going to the next slide. So then for organizations that have done that initial registration with the AG registry, there is also an annual filing, a registration renewal form that has to be submitted to the registry every year. Conveniently, this form is also due 4 months and 15 days after the end of the accounting year for the organization. So just like the 1990 or 199 and the 990 with the FTB and the IRS, this is also due that same day. You have to attach a copy of your 990, your 990 EZ, or your 990 PF that you filed with the IRS for the reporting year with the RRF1. And if you fail to attach a copy of that return to your RRF1, it will be rejected. It will be considered incomplete. You also have to submit the appropriate filing fee with your RRF1, which is based on total revenue during the reporting year. They just changed this a couple of years ago, so every organization now has to submit a filing fee. It does scale up depending on the revenue of the organization, but if you don't submit that fee with the RRF1, the application will be rejected and considered incomplete. So important to make sure that you're getting that included. Good news is that for a lot of organizations, you can now submit your RRF1 online each year. There's a charity registration online renewal system process that is available on the AG's website. And my understanding is that the AG's office is actually now automatically sending a postcard to organizations that are eligible to file online but haven't yet used that online process with information that helps you set up your user ID to access this online filing form. My understanding is those postcards are being sent out about 45 days after the end of your accounting period. So a couple of notes: you want to make sure you have your correct address on file with the AG's office. And then if you're getting something in the mail that allows you to set this system up, it can make filing the RF1 much simpler rather than mailing it in. And one just side note I'll make about the form RF1 is that one of the questions it asks is whether the organization has worked with any professional fundraisers during the reporting year. And I'm just mentioning this because the AG's office also has a separate registration and reporting process in place for overseeing professional fundraisers and making sure that they're operating in a manner that's appropriate and appropriately using charitable assets in the state. But what we're seeing lately is that when an organization responds yes on a form RF1 to using professional fundraisers, it then has to list them and provide certain information on an attachment. And we're seeing the AG's office use that attachment to then check whether the people who are listed are appropriately registered as required with the AG's registry. And where they're finding that professional fundraisers are not appropriately registered, we're seeing them send out, in some cases, additional requests for information about their status, right? So really important to make sure as a nonprofit that you're aware of what your requirements are when you're working with professional fundraisers. And that's as far as I'll go for purposes of this conversation today, but just want to make sure I'm flagging it because it's an issue we're seeing a lot of increased attention to in the AG's office and a lot of non-compliance. So now what about organizations that file that 990N with the IRS, right? So I mentioned it, when you submit your RF1, you have to attach a copy of your 990, your 990 EZ, or your 990 PF. But if you submitted the 990N, so just that postcard to the IRS, it doesn't include any financial information. So the AG's office has introduced an additional form called the Form CTTR1 that an organization that filed the 990N with the IRS needs to also submit at the time it submits its RRF1. And sorry for these acronyms for these forms, but you will get these materials so you can look back. Now, this Form CTTR1 is just a treasurer's report, and it's basically a mechanism for the AG's office to get some basic financial information that it won't otherwise get because the organization filed the 990N. It's essentially a simple balance sheet and a statement of revenues and expenses, but really important to make sure you're aware of this form, because if it applies to your organization and you don't submit it, your filing will be considered incomplete and rejected. If you wouldn't mind going to the next slide. So if you're not able to file your RF1 to the AG registry on time, including maybe because you got an extension of time with the IRS and you don't have a copy of your 990 series to attach to your RF1, then there is a process for getting an extension. So if you timely filed the request for an extension with the IRS, the 6-month automatic extension, then you also automatically get a 6-month extension on your Form RF1 filing with the AG's office. You don't need to notify the AG's office that you filed for that extension at the time you get it, but when you do submit your RF1, you need to attach a copy of your submitted extension request that you sent to the IRS with your RF1. So kind of after the fact proves that you did really have an extension of time with the IRS. Now, if you're late in filing your RF1, eventually you might be put into delinquent status with the registry. When an organization is delinquent, there is a 1-month grace period, and then the AG's office can start imposing late fees of $25 a month. An important thing to note here is that the AG's office makes very clear that you cannot use charitable assets to pay late fees and penalties, right? So I guess the idea is that some individuals can have to use private funds to pay for this amount. It can't be used, it can't be paid for from charitable assets the organization already has. And there's actually a question on the Form RF1 that asks if during the reporting period you used any organizational assets to pay any late fees or penalties. So it's something that comes up in your reporting to the AG each year on the RF1. Now, if an organization is delinquent, it technically can't operate or solicit donations or charitable funds in California. But also what we're seeing is that there are new rules, relatively new rules that were introduced to regulate online charitable fundraising platforms. And those rules in part require that those fundraising platforms have to take organizations off of the platform if they're not in good status with the Attorney General's office, the registry. So what we're seeing now is as fundraising platforms implement systems to comply with the rules that apply to them, if an organization goes into delinquent status with the AG's office, it can really significantly impact its ability to fundraise, including through these platforms. We've also heard of some governmental contracts that have not been renewed or entered into because of the organization's delinquent status with the AG's office, right? So we're seeing delinquency have significant impact for some organizations lately in particular. I'll also just note that there's a pretty significant number of organizations that are delinquent with the AG's office. We've heard anecdotally that it's up to 40% of charities that are required to register with the AG that are delinquent or have never properly registered, although I haven't actually verified that statistic. But the AG's office really is cracking down on enforcement. We're seeing them update the registry more consistently, more vigorously than we have in past years. There is still some uneven enforcement because there's, of course, capacity constraints inside the AG's office, but we are seeing them mark more organizations as delinquent than we have in past years. The other thing to note is that the AG's office is currently rather backlogged, right? So we're seeing it take quite a long time, even when an organization submits the missing returns or pays the due penalties. We're seeing it take quite a while for the organization's entry in the AG's database to be updated to reflect current status. The AG's website says that you should expect it to take 30 to 90 days to process filings from the date that they are received. In some cases, we're seeing it take even longer than that. So what can you do if that's the status or the situation your organization is in? There is an intake form that you can submit on the AG registry's website to request action or additional information. You can also try calling the AG registry, although we've had mixed luck with that lately. Jan on a previous webinar recommended physically getting in your car and driving to the AG's office in Sacramento or having an assembly member call the office. So those might be options if you are really desperate. But again, best thing that you can do is prevent the organization from going into delinquent status in the first place. And then my final comment on the RF1 is that if you're working with an outside CPA, they often are preparing copies of your 990 series return, your 199 series return, and the RF1 as part of the services that they offer. But we do sometimes see it be the case where the CPA is then going to file the 990 and the 199 electronically on behalf of the organization, but expects the organization to either mail in or electronically file the RF1 themselves. And that can sometimes lead to confusion. So just make sure if you're working with an outside return preparer that you have clarity around how the RF1 is getting submitted for the organization, who is responsible for making sure that submission happens. Don't just assume your return preparer is going to take care of it. And then if you wouldn't mind going to the next slide. So we're going to turn to our last agency we're going to discuss today, which is the California Secretary of State's office. So the Secretary of State's office is responsible for kind of registering and monitoring entities in California. So for example, if a new nonprofit is forming or incorporating in California, they're going to file their articles of incorporation with the Secretary of State's office. And if you can go to the next slide. So there's a form that you submit to the Secretary of State's office called the Statement of Information. And this is basically exactly what it says. It's an informational document that you file at the Secretary of State's office to kind of check in, let them know you're still around and that you have, what your current contact information is, the names of your key officers, and then also the name and address of your agent for service of process. Your agent for service of process can be any adult in the state of California who can reliably receive communications on behalf of the organization. Right, so you have some flexibility there. There's also business entities that can serve as agent for service of process for a small fee if that's preferable. So your statement of information form, again, really simple, but it's required filing with the Secretary of State's office. You have to file the first one within 90 days of when the nonprofit first forms in California, and then you have to file every other year after that. It is due, this is a different schedule than the 990, the 199, and the RF1 that we've been discussing so far. So it's due every other year by the end of the month in which the organization incorporated or in the 5 months before that, right? So a little trickier to figure out when this is due. But if an organization, a hypothetical organization incorporated, let's say June 15th of 2020, then it's going to need to file its statement of information in each even numbered year between January and the end of June, right? So it's basically in a 6-month window, and it will be based on the month you incorporated and the year that you incorporated. Now, you do need to file this, like I said, every other year, but you can also file it at other times, even when it's not required, to provide certain updates to the organization's information. You don't need to file a new statement of information every time there's a change to your officers, but you can use it if there is a change to your organization's address or to your agent for service of process or their address, right? So it's fine to submit it between those 2-year due dates if you have a reason to update. The statement of information can be filed online. And again, it's very quick and simple. The tricky thing with it is making sure you have a process for ensuring it gets filed on time because of the off-schedule due date. If you wouldn't mind skipping to the next slide. So this statement of information is probably the most missed filing we see with nonprofits, at least of the ones we're discussing today. And I think the main reason for that is that it's on this different due date schedule than the other forms we've been discussing, right? And it's different for every organization. And it's also not prepared by a CPA. So even if you're working with an outside return preparer, they're not going to be managing your statement of information. Really important to make sure you have a process in place within your organization to ensure this is getting submitted on time every other year. If your organization is volunteer run and you don't have a staff member who is responsible for these types of filings, really important to make sure that this obligation is getting passed on when the board members or the officers of the organization change, so you don't accidentally have it get missed in the shuffle. If you fail to file the statement of information, there can be a $50 penalty imposed. Again, not a huge penalty by itself, but it's collected by the Franchise Tax Board on behalf of the Secretary of State's office. And what that means is if you have a penalty imposed and you don't know about it, or you don't pay it on time, even if you do know about it, then you can end up suspended with the Secretary of State's office and the Franchise Tax Board, which has really significant implications in terms of the operations of the organization, right? The impact here is similar to what we've discussed in context of suspensions or delinquent status with the other agencies. But if you are suspended with the Secretary of State's office, your nonprofit technically cannot legally engage in activities. It can't sell, transfer, or exchange real property. It can't file a lawsuit in court or defend itself without specific permission. And again, you lose the right to protect your name, meaning somebody could incorporate a nonprofit with the exact same name, and you wouldn't have the ability to then bring your organization into good status until you change your legal name, right? So really important, I'm going to say it probably the 15th time, to make sure you're developing internal processes to ensure these filings are getting submitted when they're due. Also really important to make sure that these agencies have your correct contact information on file. I saw one comment that noted that something got missed in the mail. A lot of these agencies are moving, but slowly, towards electronic communications, but sometimes you have to go through an additional process to set up the ability to receive email communications instead of mail communications. During the pandemic, we saw a lot of things that got lost in the mail. We're still seeing some of that, right? Making sure you have correct contact information in file is hugely important. Okay, so with that, I'm going to go ahead and share my screen, and we're going to do just a little bit of a run through of what it looks like to kind of do a checkup of an organization with each of these 4 agencies that we were just discussing. So we're going to use Cal Nonprofits as our example for today. I did check in advance and made sure they're in good standing with all of these agencies just to make sure. So what you are looking at here, and there's a slide that has all of these websites that I'm about to go to in the slide deck. So you will have this information. But I'd highly recommend that you all go do this after this conversation if you haven't done it recently, and then use this as a kind of regular periodic process for kind of auditing the organization status with each of these agencies, making sure that everything is correct. So this website that you can see right now is for the IRS Exempt Organization Search Tool, sometimes called TEOS. If you go into this website, excuse me, it allows you to search by EIN, so by the employer identification number you have for an organization, or by name. So I'm going to run a search here for the California Association of Nonprofits. If you're not certain or it's not coming up, you can also do by city or state or country, and there's additional search terms. I'm going to run based on just the name. And when you do this, it's going to populate a list of results down at the bottom. Oh, let's see here. I will do an EIN search because for some reason that didn't populate. This site is a federal government site, can be fickle. So sometimes you do end up having to run the search a couple of times. Oh, this is why. So the IRS has Cal Nonprofits in with a space between non and profits, which is not technically its legal name. We do run into issues like this frequently with this database, where organization names, there's a little bit of a mismatch, and it can actually lead to a headache with trying to find an organization. If you discover that your organization is not properly listed in this database, there is a process where you can ask the IRS to update the database. It's probably worth going through, but it's not particularly simple. So you might reach out to an advisor in that case. But once you get an organization, you can click on it and it will take you to their site here in TEOS. Here they have the other name correctly spelled. This entry right here is what you're mostly going to be looking for. And it's Pub 78, Publication 78 is the list of organizations that are recognized as exempt under Section 501c3 and can receive deductible charitable contributions from donors. So here it says that Cal Nonprofits is listed on Pub 78. So that means it's in current status with the IRS as a tax-exempt organization under Section 501c3, and it can receive deductible charitable contributions. This code means it's a public charity, right? So if you are a private foundation instead, this will say PF. So when you're checking on your organization, you want to make sure you're seeing this box that says Publication 78. It lists yes here as being on Publication 78. And then you can check your public charity status. And down below, you will see that it lists out returns that have been recently filed by the organization. This, it's a relatively slow process to get this updated, so it probably isn't the most current filing that has been submitted by the organization. But for those that are in here, you can click on this link over here and download a PDF of these returns that have been filed by the IRS, or with the IRS, excuse me. Now, if an organization has been auto revoked with the IRS, then you will also see a separate box here about auto revocation. And like I mentioned before, that can get really confusing because it stays there even if an organization has had its exemption reinstated after auto revocation. So be careful if that's your situation, be careful that it has a very clear line that says date of reinstatement and indicates the organization has gotten back into reinstated exempt status. Now, this site is the Franchise Tax Board site. So this is where you can check your status with the California Franchise Tax Board. You can search by entity ID number or by name here. So I'm going to go ahead and search by name. The name does have to be exact if you have this default box checked here that says by name. So if you want to search without the exact name, make sure you change this button here. Now, when you perform this search, it generates, it timed out. It generates a list of organizations that pop up. You can go in, and it's going to provide the name, the address, and just the two statuses that I was discussing earlier. So this entity status is going to have to do with whether the organization is current in its filings and current with paying any penalties due to the Franchise Tax Board, right? So active is what you want to see. If it says suspended, that means that there's something that you've missed in terms of a filing or a penalty payment to the Secretary of State's office. And the second status, exempt status, has to do with whether the organization is currently recognized as exempt with the Franchise Tax Board from state franchise taxes. So if this is showing up as not exempt, then it means that you've either been auto revoked or you never filed for state franchise taxes, and you might need to reapply or apply for the first time in order to be exempt from state franchise taxes. You can also click this button to generate a letter, and it will generate a PDF letter with a date that lays out this information and the organization's current statuses with the FTB. Now, a reminder again that the FTB is tasked with receiving or collecting payments and penalties assessed by the Secretary of State's office and the Franchise Tax Board. So you can end up on suspended status with the Franchise Tax Board because you missed a filing with the Secretary of State's office and you had a penalty imposed that you never paid, right? So it gets a little bit conflated or kind of interrelated in terms of your status with the FTB and the Secretary of State's office. And then this next one we're going to go to is the Attorney General's Registry of Charitable Trusts. I see they haven't updated the new name of the registry on this search tool yet either. So you can search by a number of different things. I have in here a search by name. When you search down here, so I apologize. I had these up and ready to go, but they've timed out. It's going to pop up a list of the results, right? So you'll see here that there have been some separate filings that Cal Nonprofits has done related to raffles. But this one that says charity registration is the main filing or main entry for Cal nonprofits. So when you click on it, this AG registry site actually has a ton of information. So you're going to see at this top here, the organization's identity numbers with the IRS, the EIN, and with the Secretary of State's office. It's going to tell you based on the tax year the organization used when its RRF1 is due. And you have a separate registration number here that the AG's office issues. Excuse me. And then it shows this organization's status, right? But what's really interesting, I think, if you go down, is that there's a list of documents that you can click on any of these and pull up a PDF of these filings that have been submitted to the AG's office by Cal nonprofits. There's online renewals. So these are the forms RRF1 and the 990s that have been submitted with the RRF1 for each year that they've been filed. And then in some cases, there's founding documents that were submitted with that CT1 that was filed initially when the organization was formed. And we sometimes see various communications between the AG's office and the organization that are also scanned and included here. And then if you scroll down to the bottom, you can actually see for each year, it's not always a complete list, but usually goes back at least 10 years, whether the organization submitted its RRF1, the date it was received by the AG registry, and whether it was accepted. So if you go into this site for your organization and you see that there's some issue, you're delinquent, or it says that your filing is incomplete, you want to scroll down to this bottom part of the site and you want to look and see if each of these entries says accepted. It may be that one says rejected or incomplete, right? So here is one where the resubmission was corrected and then the correction was accepted. But if this status here shows that the information was rejected or the filing was rejected or incomplete, that gives you a sense of which returns you need to focus on, what information is missing from the registry's file that you need to get submitted. And then here it says e-accepted, right? So this shows that they use the electronic filing process. And then our final database, and I will then turn to questions, is the Secretary of State's business search tool. So this allows you to search for corporations, LLCs, other entities that are registered with the California Secretary of State's office. When I search for Cal nonprofits here, the results pop up. It shows that the status is active, shows when it first incorporated, type of entity, and the agent for service of process is listed over here on the right. So Jan's still the agent for Cal nonprofits. Then if you click on the name, then you'll see a pop-up over here to the right. And there's a little bit more information you can find here, right? So it actually will show your status, the Secretary of State's office right here as good, as well as with the FTB. And I was mentioning how those are interrelated in many instances. It has the principal address for the organization, the mailing address, and then very helpfully, it tells you here when your next statement of information is due, right? Which again is every other year, and it's based on when the month you incorporated the organization in originally. So going here and checking will give you exact information about when your statement of information is going to next be due. If you click on this view history link, it will also pop up a record of entries for the organization. So it will show you when past statements of information have been filed. You can expand and you can actually download PDFs of these filings. And it'll go back to the articles of incorporation. And if there have been any amendments to the articles, those are also going to be in here. The Secretary of State's office is working backwards and uploading PDF documents. So you may find that some aren't available for download, but they can still be requested from the Secretary of State's office if you need them. So with that, I'm going to go ahead and stop sharing screen and happy to answer any questions in our few remaining minutes here.
Thanks so much, Erin. Really appreciate all of that wonderful information. We do have a handful of questions in the chat. And with the remaining time, I'd like to run through a few of them and see if we can get them answered.
Great.
I'll start off with, if my organization is in delinquent status on the California Charity Registry, can I still fundraise and accept donations?
The legal answer is technically no. So there is a process by which you could request permission from the AG's office to fundraise even while delinquent. But technically speaking, the organization is not allowed to solicit charitable funds while it is delinquent with the AG registry.
That makes a lot of sense. Moving right along. If the org can't use charity funds to pay for late fees, can we use grant funds?
So grant funds are considered charitable funds as well, right? So funds that come into the organization that are restricted to be used for charitable purposes is generally what we mean when we talk about charitable assets. The question on the RF1 that you fill out each year asks whether you used any organizational assets to pay for a penalty or late filing. And so it's pretty broad in terms of which assets we're talking about. It's pretty much any assets the organization has are likely charitable assets.
Thank you. Dovetailing right off that, how is the penalty paid to the FTB? Is there a notification sent to the org to notify that the statement information has not been filed?
Yes. So again, if you have appropriate contact information on file, it's really important, right? Because usually what happens is a letter is mailed notifying the organization that a filing has been missed, and then a letter's mailed notifying the organization that a penalty has been imposed. I believe in terms of the mechanics of making the payment to the FTB, that there's an online portal to make that payment, but I'm actually not certain where the online portal is. It's something I'd have to look up, but I believe the payment itself might be able to be processed online once you find out that you actually owe a penalty to the FTB.
That's really helpful. And we can go through these questions as well and provide resources when we send out the recording and slides. Let's try and get a couple more in. Our org has a doing business as name. Do we file with these agencies in our legal/registered name or our doing business as, or DBA name?
Great question. Legal name, right? So the organization's technical legal name is going to be what shows up in the Secretary of State's database that I just was searching, that last website we were going through in the sample there. That will be the organization's legal name that you need to use on all filings. Also, what you should be using on contracts, formal documents that you're entering into, minutes of board meetings, anything that's really official for the organization, you want to use that legal name. If you go by a DBA or a fictitious business name, there's usually a place on these forms to also list that as kind of a secondary name, but you want to make sure you're listing the legal name of the organization in the appropriate places.
That makes sense. For clarity, this is a question coming from Doug. For clarity, if qualified, the CTR-TR-1 instead of the RRF-1, and if not, both?
Good question. Sorry for the confusion around that. It's both. It's not the CTTR1 instead of the RF1. It's the CTTR1 instead of attaching your 990 or your 990 EZ or your 990 PF, right? So it's the RRF1. And then if you don't have a 990 to attach because you use the 990N postcard, it's also the CTTR1.
I went to the SOS's website to update my organization's information, and I was alarmed to find out that I was able to do that without establishing my authority within the organization. Can anyone go to the site and update an organization's information?
Ideally, no. So the Secretary of State's office rolled out a new online platform a couple of years ago now that was intended to more likely authenticate the individuals who had access to the information and could make updates with respect to an organization. So if you go to the website, there's when you click on the link for a particular organization and that pop-out comes in on the side of the screen, there is an option where you can request access. And often that is done only for somebody who's already submitted a filing on behalf of the organization. So let's say, for example, you filed articles of incorporation and you are the incorporator. You may already have access to the records of the organization, or you may have set up access already. And I believe the process they're still using is otherwise you have to request a PIN and it gets mailed to the address on file. And then once you get that PIN, you can use it to set up online access to the records of the organization. So there are some safeties that are supposed to be in place to prevent unauthorized access to those records.
We'll get one more question in before our time ends here from Tanya. Do you have to wait until you've received assets, or can you submit a CT1 before then?
You can submit it before you've received assets.
Great. I want to thank Erin for joining us today. And if we can move to the final slide. Also, really want to underscore the collaboration for this website with the Inland Empire for Community Collaborative, or the Inland Empire Community Collaborative, for funding and making this a webinar that was free for everyone to join. Also, really want to thank Erin and Neo. The partnerships like these really allow for our nonprofit community to be included in webinars like this that are super important to address some of the more complicated aspects of starting and managing our nonprofits. So thank you everyone for joining. Just as a reminder, we'll be sending out the webinar with the slides and recording, as well as a list of resources. I'll also go back and try and answer the several questions that we didn't get to address today. But really want to thank everyone for joining, and especially Erin for sharing all of her really valuable information with us. Thanks so much.
Thanks for having me.
Take care, everyone. Have a great afternoon.